Good morning, everybody. This is Patrick MontesDeOca with a live trading room at the Equity Management Academy. This segment is brought to you by the Equity Management Academy. What I would like to do on this segment basically is to review the report that we published to our members last week. Basically, if we take a look at the weekly report by going into your member section, clicking on member section, logging in, you have access to all these reports on the right. And if you click on the weekly futures gold and silver report, we're going to take a look at this report that was published on June 26th. Based on the statistics of June 26 and see what the algorithm was telling us as we came into this week. The chart on the left here is a chart that basically we are trading in the gold market. We have a live signal here, but what I want to do is just examine right away what the algorithm was telling us as we came into on the 26th. And you can see here the close of basically the 26 indicated that the momentum was a bit bearish coming into this weekend, closing below the metrics of the pivot point for the week below 1181 was also bearish, but it basically indicated as well that if the market was to go through 1181, that it would activate basically the bearish signal to neutral, and it would put into a target the levels of 1194 to 1215. Coming into Monday, we made a high basically of 1187.60, and that came in pretty close to the weekly levels our subscribers were able to obtain. But we used the daily algorithms, we used the weekly algorithms, and if you take a look at the daily algorithms coming into Monday, it gave you the opportunity very clearly to take some profits as we came into this sell levels here. And if we put the date on 29, we're going to get the 29 indicators here, the algorithms, and this told you that coming into on Monday, the sell one level was 1188 to 1195, and the levels that we got on Monday was 1187.60. So it gave you an opportunity basically to lock in using the daily algorithms a profit of 1188, or use a trailing stop to lock in the profit. So you had an opportunity as a trader basically with the information on Saturday what to do Monday morning or Sunday night basically when the market opened. This is a 23-hour algorithm that we trade, and we use basically weekly and daily statistics electronically. For the daily algorithms, we use daily statistics that are basically established the previous day. We allow those to give us the support and resistance levels for the following day. And the algorithm really converts the prices into very specific levels for us to act and execute. And in this case, Monday or Sunday night opening would have been a perfect time to lock in some of these profits. Nevertheless, the market from those highs on Monday has come down to a low that we are watching today of 1155.80. And obviously, in looking at today's lows for the gold market, we're looking at the algorithm telling us that the 1166 to 1164 levels are possible. The low that we made today was 1155.80, and being that today is the last trading day for us here in the U.S., I want to take a look at the signal, being that Friday we're going to be closing for the 4th of July weekend. We have to use the close of today as the weekly close. And what you see here using the weekly algorithms is basically that it's telling us to exit our shorts between 1160 and 1147, very specifically. As the market came, back down below 1181, it basically activated this signal again, bearish signal, and it tells you here that basically the levels that you want to cover those short positions and take profits at the 1160 to 1147. These are the levels that we're looking at, the weekly numbers. What I want to point out is the harmonic timing that we're identifying by using the daily algorithms of 1166 to 1164. The low today penetrated the weekly levels of 1160 to 1147, and if we take a look at even the monthly reports, they seem to be aligning the price algorithms around this level of 1162 to 1135. And that's what we call basically harmonic timing is taking place. And at the worst case scenario, it looks like we're looking at basically the 1135 at the B2 level, even on a monthly basis. If we look at the weekly, it's telling us basically the 1147 level. And as we look at the daily, obviously, we seem to have made a low on the daily here today of 1155.80. So this is the way that we identify the price action into the algorithms that are basically aligning themselves harmonically. And when they do, between the day trading algorithm or the day trading wave count to the weekly wave count to the monthly wave count, then you have what we call a perfect alignment of all the price levels and algorithms synchronizing themselves during this time, which, by the way, is a very, very important time. I have been basically talking and suggesting subscribers for the past few months that we are expecting some kind of a significant bottom taking place during this time frame. And what I pointed out to you basically is the price levels that we could be accomplishing or that we are trading at in relation to those expectations. It appears that the gold and silver markets, as well as the crude oil markets or energy markets, are headed for the final test and completion of the current price structure and long-term levels of support. And this bottom completion basically is the foundation that we've been looking at for a multi-year cycle that could last into 2018. And as I have prepared our subscribers for this event over the last few months, the price action over the recent past seems to validate we are right on schedule for a final test and the completion of this expected multi-year cyclical low to take place on or before July 18th of 2015. And as difficult sometimes as it is to be a contrarian what the market is telling us is that this price action is fulfilling this long-term cyclical bottom that we've been anticipating, and we are looking at the algorithm to identify for us precisely the levels that potentially the market may reach and complete that bottom in price. Nobody, not including myself, is looking to pick the ultimate price or the ultimate bottom. It's very difficult to do that. The market itself will be the only one to do that. But what this algorithm will do is it will identify when it happens. Nevertheless, the work that we do, short-term, intermediate, and long-term, has been proven over the last 3 or 4 years, basically that 94% of the time the signals are accurate. In terms of swing trading, 93% probability or profitable trades. In terms of day trading, we're running at about 63% probability using a 3-to-1 risk-reward ratio. And so I think you're looking in what we're trying to do is not only to show you how we execute and apply and deploy this tremendous methodology that has given us this numbers that truly are above average. These probabilities that we're talking about are truly remarkable in that sense that first of all, the way that we are doing it is not back testing anything. It's simply trading live right here in the room. And basically when we do trade, we do make a point of showing the statements that we use and showing the trades that we use. We can go back as much as we need to on any of the trades that have been done here, and we have documented basically here in the room. When we document the trades, basically we can show the activity, we can show the time in sales on trades that we have done, entry points and exit points. It's completely transparent, so that if you were to follow what we do and you execute all the signals produced, then you should be able to accomplish these kinds of returns. So far we're up 117% in June. We ended, we're posting now the month of June, and this gives you the numbers on the day trade, the 3-to-1 risk-reward ratio, 63% of the time. The swing trading program is just phenomenal. It's given us, in real live trading signals, 93% profitability using a 3-to-1 risk-reward ratio. You can take a look at all the trades if you click on the tab, swing trading. We provide you with the equity curve based on these real signals. Once again, this is not back tested, that you can match, follow with time and sales, and you can see basically that you can execute the very same trades for the benefit of your account. We're not brokers. We don't tell you how many to do, but we're showing you a methodology using 1 or 2 contracts, primarily one contract, where you can have 2 or 3 months in a row trading 30-40 trades, profitable each and every one of them. And we have documented that right here. We do take losses, but what you'll see here is that the system has the ability to come back right away and regain its integrity and the consistency that basically we follow. You can follow all of the signals here. You can look at all the trades, match the trades in the room, and pretty much, as I said, we document everything that we do. For the month of June, we're completing the track record here. Should be posted shortly, but you can see we do provide now more than ever before even more transparency in providing you with the number of contracts, the date, the time in sales, the price entry and exit point, and the points profit or loss that we make. we are completely transparent in that sense that we want you to be as successful as you can be. We don't get in the way of the trade, but we do provide with a high caliber level of intelligence. Now, one of the things that I want to point out that we're doing, which I think is very important, first of all, is that the way that we manage the risk with the algorithm. And for basically for day traders, obviously we use the room here, the futures room, to day trade the market. But when we're looking at this markets providing us with what appears to be a major cyclical bottom, then obviously the question remains, and how do I take advantage of it? And for the purposes of risk management and money management, I'm going to use a specific ETF that we're trading, which is called Jnug, which is basically a directional share trust junior gold miners. This is a gold miner that we are suggesting very strongly for you to consider putting on a long-term position, as basically the market has come down to what we're looking at is new time lows. I think we might have made new all-time lows here today, the 1st of June at about 1640. But the compelling picture for me as a trader is basically what this algorithm or what this derivative was priced at when the price of gold was at 1300. The low here was made on March the 10th at 1316. And when we're looking at the bigger picture here, let me just get this level here that indicates pretty much what it was trading at when the price of gold was at the highest here. And if we look at Jnug in July 11th of 2014 was trading at $358, $400. The low was 316 recently, and the risk obviously to the downside here has been really minimized tremendously. Now, the question remains, is gold going to go back to 1394? That's only about a $230 move in the price of gold. And the answer to that is a resounding yes. Absolutely. Not only can gold go up $230, but it can go up $230 in a relatively short period of time. And what I'm preparing you on this video is the fact that all our systems, algorithms, indicators are telling us that we are about to embark on a historic move in the price of precious metals, energies, and as we have seen recently in grain markets and soybeans. The price of soybeans are confirming to us the rotation that's taken place in the commodity cycle. And contrary to basically the conventional wisdom that is reporting that there's no inflation, that we basically have a non-inflationary or deflationary cycle in the works. And what I look at is the price of basically food, what it's telling us. And soybeans is a major leading food indicator in the world. It's the measure of inflation. It's an indicator that tells us if there is a shortage or a problem with food supply. Not to mention the application is so universal that the application is for industry as well as human consumption and animal consumption. When you take a look at the crush in soybeans, producing soybean meal, which is for human and animal production, as well as soybean oil, which is also for human consumption and for industrial purposes as well. So it is a tremendous indicator, a magical product that gives us the sentiment, you might say, of the level of demand, food demand, or the level of inflation. And according to what has happened here recently, when you see that in a couple of months the price has risen over $5,000 per contract, there's something that is telling us, and we need to pay attention to this. And this is what I mean by we're getting the confirmation that the rotation for the next commodity bull cycle is beginning to take place. The first rotation confirmation was in the grains. And we're looking for the metals here as we speak to begin their rotation process sometime here by no later than July 13 to the 18th. It could happen any time. And what I would suggest to you is that if we were to see an attack once again in the price of gold and silver, and if we were to see a spike low taking place, I would say to you that is where I would strongly suggest that you basically put on your long-term positions in these derivatives that we're looking at, that we're trading, which are offering just a fantastic projection. When you take a look at the price of Jnug, and if we look at the price of gold into that same time frame, you can see the potential at 1346. This was July of 2014. Gold was trading about 1350. So the question is, are we going to see 1350 again in gold? Is it possible? Very possible. And sooner than you think. The market is establishing what appears to be, once again, in using these algorithms, a major level of support at these levels here. And so a $200-300 move in gold is certainly very, very possible. And so once again, we're looking at the possibility that the gold market is indicating for us a major bottom is taking place as we speak here, and that if we were to see once again a test, some kind of a spike low into the price of these metals as we come into these algorithms here that we have identified for you on a monthly basis, on a weekly basis, use these levels indicated in these reports to accumulate and basically put on your position, your long-term position, and complete 100% of the purchases that need to be made. Personally, I think that the market action recently is confirming that to be the case, and what will validate it, you might say, with extreme high probability is if this previous lows were to be tested successfully, but if it does happen that the price goes into these levels and tests these levels of support here, into the low 15s in silver, or I would say into the mid to low 1130s in the gold market, it's an incredible historic buying opportunity at those levels for long-term traders. And basically the expectation is that once that formation is taken place, that we're going to be looking at a 2 to 3 year bull cycle that could last into 2018. For any additional questions, please don't hesitate to contact us. We are available. We're easy to reach. We want to help you. If you have an interest in building a position or to get involved with this market, please give us a call, no obligation. You can reach us at 877-733-1511, U.S. toll-free number, or you can call us directly at 805 area code 418-1744. You can email us at support@ema2trade.com. That's support@ema2trade.com. Once again, it's been a pleasure to speak with you, to share